So what's the big problem with wealth creation? How do people like us, who didn't inherit a boatload of money, who are investing and building wealth from our own blood, sweat and tears, how do we invest in a way that gives us remarkable results and become financially free before retirement age? I don't know about you, but I am sick of hearing from wealth gurus and experts who don't walk their own talk and prescribe strategies that are a one-size-fits-all approach. For self-made people like you and me, I'm here to tell you that you don't need to be superhuman or already wealthy to reach financial freedom earlier than 65. This is the Alternative Investing Podcast. Hey guys, welcome back to the podcast. In today's episode, I want to take you through 10 things I wish I had known when I started investing. Like many things in life, experience, getting some cuts and bruises, and just sheer volume of effort is often where we learn the lessons that take us through our lives, especially when it comes to wealth building and investing. I have created this podcast off the back of an email that came through from a younger investor who asked me, what do I wish I'd known when I first started investing? And so what I'd like to share with you is just a quick snapshot of 10 things that I think are really valuable to get your head around so that you can actually start getting consistently better results much sooner than I did. Now, the first one is the value of patience and dirty reps. I really wish as a younger investor I had fully embraced this idea. So I think intellectually I understood that building wealth was going to take time, but I was always looking for the quick fix. You know, what was the quick and dirty method that we were going to employ in order to get some runs on the board quickly? As a younger investor, I wanted results yesterday. Everybody else seemed so far ahead. I was frustrated that I didn't have enough income to do the deals I wanted to do. And had I known this concept of dirty reps, and really that concept is a language that I borrowed from an old business coach who used to talk about this idea that it's not until you do the repetitions around certain activities, it's not until you build that muscle that you can actually build a really strong foundation for saying, yes, I've nailed that skill or that attribute. And I think if I could tell my younger self, just do the dirty reps, you know, get in the game, practice. And that really that early stage of being an investor was about building a skill set that would create a foundation for making more confident, lucrative decisions later in my career. I probably would have not resisted it so much. I think I wasted a lot of time in that first few years of jumping around looking for tactics rather than focusing on building foundational skill sets. So number one, that would be, the value of patience and just doing the dirty reps. The second thing I would say I would tell, or I wish I had told my younger self, was to distinguish between, and this I guess is an extension of what I've already said, playing the short game versus the long game. As I said, you know, when I started out as an investor and when I really decided to commit to it on a full-time basis, we had a bunch of property investments that were just sort of ticking away in the background. And for some reason in my mind, I thought, oh, that's a little dull. What else can I do? And I started as a young mum investing heavily in learning about share trading and option trading and futures trading and currency trading. And I kind of thought that was a way to fast track everything and make a quick buck. And it took me years to distinguish between being a trader versus being an investor. And what I realized is that had I really taken a long game approach to my investing, I probably would have reached some of the aspirations that I had much sooner. Instead of chasing shiny objects, I really should have doubled down on what was actually working. And I eventually went full circle and I saw that with virtually no time thinking or effort, a lot of the properties that we had purchased had exponentially created returns that would outstrip anything that I created in any other asset class at that time. So I recognized it's probably, a few years into my investing journey that if I had made decisions that were congruent with playing the long game, if I'd really taken the time to understand the difference between being a trader versus being an investor, or being a speculator but versus being an investor, I certainly would have had much better results much sooner. The third lesson I wish I had known about when I first started investing is this competitive edge that comes from having a great network. A great example of this is I went to New York in October of last year. I took a whole bunch of clients with me and I invited a whole bunch of my trusted advisor network to fly to New York to share with us insights into what was happening from a strategy perspective, what was happening in the market, unknown opportunities and uncommon wisdom. And one of the guys that came was sharing this idea around the metrics that mattered to him when he was evaluating an investment. And he shared some insights into how easily some of these metrics can be manipulated. Now, that is knowledge that I would never find documented in any piece of written whether it's research reports or otherwise. It was anecdotal, boots on the ground, personal insight that came from someone who is actually playing the game at a level that I want to be playing at. And so it is a lesson that I've probably used and applied for at least the last 10, 12 years of my investing. But if I'd had it for the prior decade, I think my results would have been exponentially better. I think there's two different ways to be smarter as an investor. And I guess knowledge is one part of it. Wisdom and education, that's a huge driver of results. But if I can absorb other people's lessons, if I can leverage the results that other people have, it will help me avoid silly mistakes. It will give me access to opportunities that are not available to others. It will give me a competitive edge because I'm getting access to uncommon wisdom that's just not available in the marketplace, that's certainly not being talked about. It will give me an insight into conversations, private conversations that are really finger on the pulse of what is happening in the market. So network is something that I certainly think if I had really understood the value of that. The fourth lesson that I wish I had known about when I started investing was understanding this concept of downside protection. Some people call it risk management, but I think when people look at investment deals, they're often just focused on the upside. People get dollar signs in their eyes. They're thinking about, all of the money they're going to make. And there's an intuitive kind of assessment of risk. Oh, I think it's this, but they have no way of quantifying it. And they really don't understand what are the safety nets in the deal that are going to protect me from losing my capital. And the reason I say this is I've certainly been in deals where I have not quantified or considered downside protection. And, those of you who understand a little bit about the alternative investing space recognize that part of my love of it is there is a lot of downside protection that you can put in place on deals that you simply can't get in other areas or other strategies in the market. So this idea of understanding risk, of understanding and quantifying downside protection. I think if I'd been able to apply that to some of or many of the deals that I did in the early days, which resulted in cuts and bruises and in some case gashes, I would have been a whole lot better off. The fifth lesson that I would love to share with you guys that I wish I'd known when I'd started was this concept of simplicity. I think I've shared this in past podcasts a bit, or one of the favorite expressions that my husband John uses is that success is a process of shedding. I think as particularly I've become older and wiser, this pursuit of simplicity, of decision making, which is not so much effortless, but which has very little friction, is really, really important. And I think as I get older and wiser, I recognize that when things are complex, it just invites mistakes, it invites risk to join in to the investment. So the best example of this that I could kind of share with you is that if you do not understand what you're investing in, then perhaps you shouldn't be investing in it at all. And I have invested in a number of one-off opportunities or a series of opportunities where I sort of, if I'm really honest, I didn't quite understand all aspects of the investment and I blindly trusted the brochures or the information that accompanied the investment. And had I kind of run the rule of only investing in investments where the strategy being employed was simple and easily understood, where I could understand the risks and I could understand what the numbers were and what assumptions had been made. I certainly could have saved myself from a lot of heartache around little losses or mistakes. So that's another big one. Lesson number 6 that I want to share is this concept of continuous learning. I think it's really easy when you are, especially a relatively high net worth individual, to kind of think that you've got it figured out. And I've learned this lesson from people in my own network who are significantly wealthier than I am, which is this humility to tell themselves that they need to be on a journey of continuous learning. One of the things that a lot of people ask a lot of the trusted advisors inside of my community is, why do they keep investing? Like, they are financially independent by a long way. And it's partly this desire to be learning and leveling up as an investor. It's almost like a way of life. You never know it all. And I think if you can embrace this idea of never getting too comfortable with what you know and thinking you know it all, then it's definitely a recipe for building wealth that will, endure. And certainly, imparting that wisdom to those around you as well. So I met a guy, for example, on my last trip to the States, who was an investor. He was a participant at a conference that I was at, and he was worth over $100 million. I know this not because he told me, but a number of other people referenced him. And we ended up sitting next to each other at this particular conference. And the question came up, what are you here for? Why are you here? And he commented that there's always something to learn. He comes to these conferences and mostly it's the same kind of information for him, but sometimes someone will explain a point of view or share a story that gives him an aha moment, and that aha moment can result in millions of dollars worth of wealth for him. And so I think cultivating this you never know it all and humility is not optional. It's not so much that I had any kind of ridiculous arrogance as a younger investor, but just sometimes I felt like if I did this seminar or if I did this program or if I read this book, that would tick that box. And, I guess in a naive way, I felt like, okay, well, I've ticked that box. I know about that asset class. Now that's all I need to know. And in hindsight, I should have recognized that the need to keep learning, to deepen my knowledge, to think sideways. If I'd been able to grasp that idea much, much sooner, again, I might have been much further ahead. Lesson number 7, I'm going to call adaptability. I think one of the most important attributes of a really successful investor is the ability to change or adapt as market conditions change and adapt the investments accordingly. So right now, for example, markets are really uncertain and potentially going to hit some period of high volatility. In those sorts of markets, you might need to change the speed of execution. You might need to slow down your decision making. In my own case, I might tighten my investing rules, but I don't throw out my game plan and I don't doggedly stick to the cadence of investing that I might have done during a more buoyant market. Having said that, I also wish that I had created what I call non-negotiable rules, non-negotiable investing rules. And in many cases, if you've got those, then it's not so much that you need to stick your head in the sand if the markets start to be volatile. It's just that you do not bend on those rules. And I know inside of our community, we're really doubling down on this idea of what are our non-negotiable investing rules that we need to stick with regardless of market conditions, and especially during times when, everyone is starting to lose their head and panic. Certainly, I think if I had understood investing rules as a concept, if I had understood the importance of having non-negotiables, I certainly could have, again, made better investment decisions, not so much avoid losses, but made investment decisions that would have propelled me further because, you guys would understand this. There's a great opportunity that shows up every day of the week. And I think what a lot of people need to understand is this idea that it's as hard to rule things out as it is to rule them in. And when you're an investor that's looking at stuff or looking for opportunities every day, the bigger challenge isn't what investments should I do, it's which ones should I not do. The eighth lesson I wish I had known about when I started investing is this concept of be prepared to be a maverick. Now, this is a podcast episode in itself, but if you understand the concept of a maverick is an unorthodox or independent-minded person. In some ways, I'm more of a skeptic now when I see that the rest of the market is seeing rainbows and unicorns. So an example of this is over the first couple of years of COVID, after the initial shock and the markets, particularly property markets and share markets, just started to boom, I felt a level of skepticism around that. And I could see that people were paying over the odds for specific assets, particularly in property. There were a lot of people congratulating themselves on having made fantastic gains. And, generally speaking, people were wearing beer goggles around their results. And one of the things that I realized is that if you do what everybody else is doing, it's really hard to get outsized returns that are sustainable. There's nothing wrong with traditional investments. And if you're someone who's made a lot of money over the last 2 years, congratulations. And I think if you want to consistently earn outsized returns, you've got to start thinking outside the square. If you are unprepared to look left of field at other ways of bolstering your wealth, then you are going to be stuck with mediocre returns. And the only problem that I see with mediocre returns, and it's not a good or bad or a judgment issue, is that you are forced to stay on the treadmill longer. If you are someone who likes the idea of an early retirement, it's really important to be a maverick, to be independent-minded and set yourself apart from what everyone else is doing. Lesson number 9 of things that I wish I'd known when I first started investing is this concept of emotional resilience and willingness to admit mistakes. I think that there are a lot of investors out there, and I certainly was guilty of this when I first started, of being completely devastated when I got something wrong, especially money. It has such an emotional charge for so many of us. And I made small losses and big losses in my early days. And the thing that really slowed me down or set me back was the meaning that I attached to those losses. Investing, I now realize, is a game of snakes and ladders. And I recognize that many people, because I coach a lot of people around this concept of the loss and the grief and the meaning around loss, many people treat loss as if it's a personal failure. But the truth is it's actually just part of the game. And as a more experienced investor now, what I realize isn't that the amount of times you lose or win, that's not what matters. It's how significant the wins are relative to the losses that matters more. And certainly investors who are well ahead of me, who are, really top of their game, world class, share that lesson in lots of different ways, which is it's not that they never make mistakes. And any investor who says that they've never made a mistake is lying, frankly. But it's that emotional resilience and willingness to say, mistake, pick yourself up, dust yourself off, and keep moving forward. Not throwing out the whole strategy or the whole learning experience in favor of some other way of building wealth, but recognizing and analyzing what is the mistakes that you've made and how to move on. Now, I've even heard really successful investors even talk about doing as little post-mortem on an investing loss as possible. So that's certainly a valid perspective as well. But I think the real key here is not agonizing and having the emotional grit and resilience to keep going and keep moving forward. I know in my own decision-making, when I incurred a really big loss that really hurt my family, it took me a bit of time to overcome and digest that loss. And certainly if we were to experience that now, I would be a lot better equipped to move on from it. The last lesson that I want to share with you guys today is this lesson around retention of control and decision making. One of the things that happened to me as a younger investor is I would look to other people as the gurus to tell me what to do. And there were a number of occasions where I relied heavily on someone's opinion or decisions around what I should do with my money, and it resulted in either a substandard outcome or a loss. And I recognize that you cannot be master of every subject around money and wealth, and that's why you've got to pick the lanes you choose to operate in. But you should only invest in what you understand. You should leverage the skills of other people, but you should not outsource decision making. The ultimate decision around what you do with your money should rest with you. If I had that as a kind of a fundamental in my investing rules much earlier, I would have made significantly more money and fewer mistakes. I think as well, there's a recognition that there's a lot of people, well-intentioned people out there who are advisors in the wealth space who have theoretical knowledge, but they don't actually themselves have the runs on the board. And when I say that, I mean they haven't created their own wealth using the strategies and tactics that they advocate. So, I'm really cautious about that now. And it's almost my number one go-to question when I speak to anyone who's potentially going to become part of my board of advisors. So guys, quick recap. There are so many things I would share with my younger self. And I'm starting to even write some of these things down in the hope that one day my children might look at those if they're interested. And patience, dirty reps, having that long-term focus, focusing on building their network and the value of mentors, understanding why downside protection is really important, simplicity, continuous learning and not being arrogant, having humility about how much you know, adaptability, to stay with it, but kind of adapt your investment and your decision making in difficult times. Being prepared to be an independent-minded person when it comes to investing. Emotional resilience, grit, and a willingness to digest and admit mistakes, and retaining control of your decision making. If you can even grasp some of what I'm saying and then bring that into your own investing journey, you are going to completely set yourself apart from most other investors who are really at the mercy of sentiment and other, popular opinion that exists in the market. So guys, I'm going to sign off there. I hope you found this really useful and I really look forward to catching up with you on the next episode. Take care. You've been listening to the Alternative Investing Podcast. If you're feeling frustrated that despite doing everything right in the property investing playbook and you're no closer to financial freedom, then head on over to inkosiwealth.com to learn more about how you can use alternative investments to catapult your investing income and blend strategies to shave decades off your timeline to financial freedom. See you on the next episode.